Hey guys, welcome back to episode 10 of US Stock Market Technical Analysis, where I share with you my analysis of the S&P 500, Dow Jones and the Nasdaq. As we reach the 10th video for the US Stock Market Technical Analysis playlist, I'd like to take this opportunity to thank you guys for tuning into these videos and supporting the channel. And if you haven't already subscribed to this channel, make sure you subscribe to this channel so that you don't miss out on future videos such as this technical analysis video of the US stock markets. And for those of you who are new to this video and playlist, in this video I'll be sharing with you my technical analysis for the S&P 500, the Dow Jones and the Nasdaq. Alright, we'll begin with the weekly time frame for the S&P 500 and then work our way down from that time frame. If we take a look at the last 2 weeks, so for this candle here and for this candlestick over here, we close at a price level which is near the previous high of this candlestick over here. At this level, this was the previous high for the S&P 500. But in the recent weeks, for this candlestick and this candlestick over here, we have managed to record new highs for the S&P 500. The S&P 500 record new high on the back of the news of the positive developments for the vaccine. And if we take a look at the price chart for this weekly time frame, you'll see that back in about middle March, till as of now, the S&P 500 has generally been on an uptrend. So from here to here, prices were on a clear uptrend. Over here, we had a bit of a ranging movement where prices moved sideways for a while before prices managed to break above this range in the past 2 weeks. And right now, the S&P 500 is in new highs territory. Now, let's take a look at the daily time frame. We'll bring on the technicals and then we'll zoom out a bit. Over here, this was where prices ranged for a bit before prices managed to break above, and then now we are around at this area over here. And over at this range over here, we had some interesting developments. As prices were pushed to the downside over here, there were signs that this might be a potential double top pattern as indicated by this first top and this second top. And a double top pattern is a bearish signal for us as investors and traders. However, for a double top pattern to be confirmed, we want to see prices break below this area of support. And as prices reach this important area, not only did prices not break below this area, but prices find support at this area and start to move upwards. And prices being able to find support at this area is also an important sign for us as investors and traders in the stock market. When prices found support over here and move up, not only did it invalidate the double top pattern, but it also formed a double bottom pattern over here. So this was the first bottom and then this was the second bottom. And a double bottom pattern is a bullish sign. In a double bottom pattern, you'll see prices forming a W shape on the price chart. So this was the W shape. And the double bottom pattern is confirmed when prices reach the same level over here or higher. So in this case, for this price over here, prices reach the same level and higher. But as you can see over on this candlestick, after prices make new highs, there was quite a bit of selling as indicated by the long bearish and red candlestick. One possible reason on why there was quite a fair bit more of selling is that people who bought over here at this previous high and who experienced losses over here might sell their position over here when prices reach back their break-even point. So for those who bought over here and experienced losses over here and now are experiencing a break-even, they are happy to sell at a break-even point compared to a loss. And that is one possible reason on why we see that there was quite a bit of selling over here as the S&P 500 made new highs. Let's go on to the 1 hour time frame to see the levels that I'm taking a look out for. We'll zoom out a bit. Alright, so right now we are on the 1 hour time frame, and as you can see, this gives us a clearer look at the important levels of support and resistance to look out for. As prices make new highs, sellers start to come in and push prices down. And as you can see over here, there was a bit of support at this area over here before it break to the downside. And then the next support was this support zone over here. Prices managed to find support over here, then it went up a bit, encountered some resistance before it broke above, and then the old resistance became new support and prices found support here. Found support over here and found support over here before it break down and found support at this support zone that we have mentioned over here. And after prices found support over here, it broke to the upside and it found support at this level over here before it again broke above to the upside. And we can see over here prices managing to find some support over at this level over here. Then it encountered resistance, fell back down, found some support here. Then it ranged a bit over here before it broke to the downside, and then it found support at this zone of interest over here. The two strong areas that I'm taking a look at is over here and over here at this area of support. So this is the strong area of resistance that I'm taking a look out for, and this is the area of strong support that I'm taking a look out for. What this means is that barring any huge news in the coming week or so, I believe that prices are likely to range between these two areas of support and resistance. So if prices do break to the downside from here, the support that I'm taking a look out for is this area over here. But if prices do break to the upside, then the next area of resistance that I'm taking a look out for is over at this point over here. A quick point to take note over here is that prices can and are able to break past beyond these areas of resistance and support. And if prices do break beyond these levels, then it will help me form my view on the short-term trend of the S&P 500. So if prices do break above this resistance over here, then it indicates to me that the short-term trend is bullish. And on the other hand, if prices break below this area of support, then it indicates to me that the short-term trend is bearish. Because as you can see right now, we are ranging between these two areas of resistance and support. So the short-term trend is neither bearish or bullish. Those are the two areas of interest that I'm taking a look out for moving forward to help me form my view on the short-term trend. That's my technical analysis for the S&P 500. The next one that we'll take a look at is the Dow Jones. So we'll go on to the weekly time frame first before we move our way down from there, and we'll clear the technicals. For the Dow Jones, the previous 2 weeks, we also see prices reaching new highs. The previous high was at this point over here at around 295.54. And as you can see in the previous 2 weeks, prices have managed to reach that high and in fact also form newer highs. But if we take a look at the candlesticks over here, the small bodies indicate some indecision in the markets. So as the Dow Jones reached previous high and made new highs, buyers and sellers became indecisive of where prices should continue next. And it is shown on the doji candlesticks, where the body of the candlestick is relatively smaller than the upper and lower wicks. Now let's take a look at the daily time frame to see how prices are playing out. We'll zoom out a bit and we bring on the technicals. Similar to the S&P 500, the Dow Jones also formed a double bottom pattern over here. So this is the first bottom and this was the second bottom. And we also see the W shape forming. Over at this candlestick over here, let me zoom in a bit. At this candlestick, this red candlestick, we see that prices gap up from here to here. However, after prices gap up, we see that there was quite a bit of selling over here. So this line over here, at a price level of around 295.65, is the price level of the previous high. So as prices reach the previous high, you see that after a while, prices start to come back down as sellers step in and push prices down. And in fact, it closed at this point over here. And similarly, over at this point over here, as prices reach the old high and made newer highs, selling pressure start to kick in and push prices down. So you can see that there is quite a bit of psychological barrier at the previous high. Because every time prices reach close to or make newer highs, sellers start to step in and push prices down. However, in midst of all this selling pressure, there's also quite a bit of buying pressure over here. There was buying pressure to keep prices above this area of support, and there was also buying pressure to keep prices above this area of support. So right now, there's quite a bit of selling pressure when prices reach the previous high, and there's also quite a bit of buying pressure when prices are pushed down. And these buyers and sellers will battle each other out until there's a winner. Let's take a look at the hourly time frame to have a better picture of what's going on. So over at this candlestick over here, as prices gap up from here, you'll see that there was quite a bit of selling pressure from here all the way to here. And there was also selling pressure over here before prices managed to find support at this area of interest. And it broke above the previous high and formed new highs over here before selling pressure started to kick in. And then prices managing to find support over here, and it moved up again before selling pressure start to kick in again and push prices down. So right now we are facing quite a bit of selling pressure overhead. Unless the selling pressure start to decline a bit, it will take quite a bit of bullish momentum to push prices to the upside. However, if sellers are not done yet, there will be selling pressure over here, so price will move to the downside and find support over here. Or if we break below this area of support, then the next area of support will be at this purple box over here, where prices manage to find support over here. That's my technical analysis for the Dow Jones. Now let's take a look at the Nasdaq. So similarly, we'll begin on the weekly time frame and then work our way down from there. So let me clear the technicals and zoom in a bit. For the Nasdaq, we haven't hit the previous high of 303.47 that was formed back in around 31st August 2020. In fact, I think it's well documented that the Nasdaq has been underperforming the broader market in the past couple of weeks. And you can see why. In the past 2 to 3 months, not only did the Nasdaq fail to make new gains, but we have actually declined. Let's take a look at the daily time frame and we'll turn on the technicals to have a better idea of what's going on. So this candlestick was formed back in 2nd of September 2020, and this was the previous high for the Nasdaq. And since then, prices have been ranging from this price of around 303.35 to this level of around 259.90. So this was the range that prices have been trading in the past 2 to 3 months. Usually when prices have been ranging for quite a while, it tends to signal a possible accumulation or distribution. So what is accumulation and what is distribution? Accumulation is when stocks are transferred from the weak hands to the strong hands. So who are the weak hands? The weak hands tend to be retail investors and traders. And who are the strong hands? The strong hands tends to be smart money, the big players and institutions. So accumulation is when retail investors and traders are selling and the smart money are buying. And for distribution, it is the opposite. It is the smart money that are selling to the retail investors and traders. So in a distribution, stocks are transferred from the strong hands to the weak hands. So how do we tell when prices are ranging whether it's a distribution or is it an accumulation? Typically, if prices are in a distribution, it will fall and break below the support level. And for accumulation, prices are likely to rise and break above the resistance. Now let's take a look at the hourly time frame to see how prices are reacting to the areas of support and resistance. Over here, you see that prices are ranging between this area of resistance and this area of support. For the short-term trend to be bullish, I want to see prices breaking above this area of resistance, then finding support here before it continues moving upwards. And for the short-term trend to be bearish, I want to see prices breaking below this area of support and moving downwards. The third scenario is price being neither bullish nor bearish. So in this scenario, what is likely to happen is price trading within this range. That's my technical analysis for the Nasdaq, and that concludes my US stock market technical analysis. If you have learned something from this video, smash that like button because it will really help the channel grow and allow me to produce more content such as this. I'll see you in those other videos to your financial success.